Colvin of R.J. O'Brien joins us on this Tuesday morning. Good morning, and you're here to talk about the correlation between the 10-year yield and the S&P 500. Let's start with that 10-year. What's the buying point here?
Well, good morning. I think right now we're seeing 10 years hover in a post-CPI level 255 that we saw yesterday. It's going to hover between 2.5 and 260 probably for the foreseeable future until we get some data that pushes one way or the other. I like buying 10 years north of 2.5%, and I'll tell you why. First of all, I think the risks around the globe are continuing to rise, and treasuries are a safe haven. Secondly, a reach for quality yield from pension funds, insurance companies, and money centers. They want what's quality and what's out there. There isn't a whole lot of supply out there right now still, so they're looking to buy up and gobble up high-quality 10-year notes. And lastly, I think the Fed has shown its hand in that inflation is going to be a key indicator, and last week's numbers of lower inflation helped kind of flatten the yield curve, which means benefiting 10s and 30s. So I think right now, heading into year-end, anything north of 2.5% is a buy. I think we do see a spike lower in yields before the year is over.
Do you think people are still being pushed into the S&P 500 into equities?
Well, I think as you start to see risks rise globally, you do start to see stocks benefit. Now, the reason being is that while 10-year Treasury yields drive so low, there is still a need for return and a mandate for return. So you're going to see equities outperform as they have since the Fed went to the zero interest rate policy. I think looking at stocks at 1985 in the S&P specifically, that's not a bad buying area, probably all the way down to 1975, because if you look out the curve here a little bit, we do see the end of tapering in the October meeting. We do get another couple of Fed meetings, and the Fed has already set the levels. So if we don't reach those growth levels and the Fed has to stay on hold longer than expected, then stocks are very undervalued. And I think as we move closer to year end, the market's going to come to that, and we're going to see a new high for the year.
Thank you, Todd.